Okay, this financial, the income statement is a simple one. Why is a simple financial statement?
Because it's only compared 2019 and 2020. Only two
Because
years.
this company is a service company, okay, because this is the is offer the services, okay, the consulting services to audit firm kan, this one, Deloitte
Yeah.
ni. Okay, so they have a revenue, operating expenses, includes only staff costs, depreciation and amortization of their fixed asset, and other operating expenses. So they do not have any cost of sales, okay, because they don't have any inventory. Okay, and then they have what's operating profit, and then other income, investment income, and finance cost there. They separate the finance cost already, and then profit for the year. Okay, that's a different kan. Kalau kita akan um, what okay, the finance cost we will put all under okay, we deduct, okay, we all after net gross profit, then add income and add other income, then we deduct with the all the expenses kan. So dia yang kat sini dia dah separated between the operating expense and finance expense. Then they arrive figure for the profit for the year. Okay. Next, Syamina. Then ada balance apa financial position. Oh, this is comprehensive income, and then divide the profit, and then the balance sheet. Okay, look at what terms they use. What is the term they use?
Sheet.
Balance sheet kan? Dia tak guna term financial position. Okay, so they have the assets, NCA, current asset, total asset, minus liabilities, current liabilities, non-current liabilities. Okay, and apa dia kata? Supplement information. Okay, they have a members interest. Dia guna members capital. Kenapa dia guna members kat situ? Okay, you see the difference between company in Malaysia and Deloitte here. In terms of the comprehensive income tu, cuba boleh nampak difference dia. Anyone? Can share the difference between companies in Malaysia and companies in UK?
Maybe kena tengok yang Malaysia dulu kot, Madam.
Yes, come again?
Maybe kena tengok yang Malaysia dulu kot.
Yang Malaysianya you dah master dah yang Malaysia punya kan? Tak master you master dengan UK punya. Okay, you still when you learn the FFA last semester, do you use the word balance sheet?
SOP. Statement of financial position, right?
Statement of financial position kan? So this one is balance sheet. Okay, SS 31st May 2020. Okay. So this is that's why I said you must familiar also with the UK's financial statement. Okay. So we are going to look at it tomorrow. Okay, but we are not highlight on the financial statement, okay, but we are going to highlight on the auditor's report, okay. So, okay, thank you Shamina for sharing.
Thank you. I'm welcome.
Okay, so today we are going to proceed with the attendance. Semua dah ada ke attendance? Okay, Fitri tadi ada. Ada.
Ada, ada.
Okay, Istina? Istina? Ada. Mira?
Saya, madam.
Jamina? Dia tadi dah. Aini Zati?
Saya, madam.
Faizah ni?
Saya, madam.
Yasmin?
Saya madam.
Siapa ni? Amy?
Saya.
Nurisha?
Saya madam.
Afika?
Saya, madam.
Naim? Naim, Fitri, is it Naim in the class? You see Naim? Ada? See Naim or not? What happened to Naim? Ada? Fitri?
Naim tak ada dekat kelas.
Naim kat kelas? Tak ada, dia tak masuk lagi kot. Fitri tolong dekat tak dengan bilik dia?
Saya boleh check.
Fitri tolong check dia.
Okay.
Okay, thank you. Amni?
Saya madam.
Fatin?
Madam, dia baru pergi tandas tadi.
Siapa? Fatin? Oh. Ingatkan siapa tadi pergi tandas. Terkejut tu sebab apa? Sebab tadi cerita tentang Naim. Takkan Kristina jawab tentang Naim. Mimi?
Saya, madam.
Ani?
Saya.
Amelia? Okay. Okay. Today we look at last section, section E. Okay, on the audit completion. So we go on first chapter on the forming and audit judgment. Okay. Share. Okay, Fitri, are you in, Fitri?
Naim, madam, Naim.
Naim dah masuk?
Dah.
Awak ke mana, Naim? Naim,
Ya, madam.
ke mana? Awak pergi mana tadi? Lambat masuk kelas.
Sorry, madam.
Okay. So today we are going to look at on the last part in the audit, last process, okay, before the auditor issue the audit report. Okay, after auditor gather all the audit evidence and have satisfied with the result of audit evidence, and they have accumulate and sufficient and appropriate audit evidence, then before auditor conclude that the financial statement presented with true and fair view, auditor need to review first. Okay, the review first the evidence that they have gathered. Okay, today we look at on the process how the auditor review and which item that the auditor need to focus. Okay, which item that the auditor need to focus. So today we look at on the performing of audit judgment first. Okay, how you are going to form the audit your judgment. Okay, before you come up with the auditor's report or auditor's opinion. Okay, today, okay, in this topic, we are going to get the objective of how an auditor perform an overall review. Okay, overall review of the financial statement. Okay, overall review. Okay, and then explain the effect of subsequent event on the financial statement up to the date the financial statement are signed. Okay, okay, we are only cover the financial statement, okay, until the date the financial statement are signed. Okay, and then explain the audit procedure for event occurring up to the date of auditor's report. Okay. So up to the date. So when we are going to perform the audit procedure, okay, we are going to cover the audit procedure up to the date of auditor's report only. Okay, so not after the not up to the date the financial statement are signed. So that is a different period. Later we will look at. So you must able to differentiate between number 2 and number 3. Okay, for if you want to review on the subsequent event, okay, subsequent event ni IAS 10. Kan, betul tak? You belajar subsequent event IAS 10. Okay, so when we review the effect of subsequent events, okay, we will look at the events up to the date the financial statement are signed. When you okay, perform the audit procedure, okay, you are only perform the audit procedure up to the date of the auditor's report. Okay, and then you must be able to that is in terms of they have two things already here. One is overall review. This is the second one on the subsequent event. And the third one, we are going to cover on the going concern. Okay, going concern. So I hope you still remember what we have discussed on going concern a little bit before. Okay, going concern. So this is importance and need for the auditor to review on going concern. Then you must know the difference between the responsibilities of auditor and responsibility of management regarding the going concern. So you will see your roles as an auditor and the management roles, okay, on the going concern. Okay, and then you must also determine the potential indicators for the entity is not a going concern. So potential indicators of a going concern, if the company does not falls in that indicator, so that is considered not going concern. Okay, and then you must be able to discuss the procedures in performing the going concern review. So this is the third things you have to learn. Okay. So the first one is on overall review, second on the subsequent event, third on the going concern, fourth on the written representation, So explain the purpose and procedures for obtaining written representation. So we have learned before the written representation in the test of control, where you identify the weaknesses, then you send a management letter to the company, and company will reply in terms of written representation. So that is one thing regarding representation, because when we learn on representation from management, okay, it actually is a lot of item, okay, need a representation in order for the auditor to get an evidence. Okay, and then you will look at the basic elements of representation letter. Okay, representation letter is not same as letter of engagement or management letter. So far we have learned, okay, two letter. Okay, one is called letter of engagement, and the second one you have learned on the management letter. So in this topic you are going to cover the third letter, that is called representation letter. So you must be able to differentiate between those three letters. Okay, and as so this is the fourth one you are going to learn on the representation. And the last part, you have to deal with significance of uncorrected misstatement and evaluate the effect of the uncorrected misstatement. So number 5. So you have 5 major things in this topic before the auditor can decide whether to issue unmodified opinion or modified opinion. Okay, it's a long topic today. Okay, and also it's important for your AA paper later. So any question, class? Any question?
No.
No. Okay. So how many parts today? 5 parts. So we will look at on the first one. Okay. So if this is the first one, okay, on the overall review of the financial statement. Okay. Overall review of financial statement. What you are going to review? Remember? Okay. In the previous chapter, that when you deal with the analytical procedure, okay, when you are going to perform the analytical procedure, ada?
Yes, madam.
Do you remember the analytical procedure?
Compare the financial statement of previous year with current year.
Okay, you compare the item in the financial statement. Okay, comparing at the whether it use the data, financial data or non-financial data. Okay, okay, thank you. So another one. Okay, Ainizati, when should you perform the analytical procedure? Ainizati?
Yes, madam.
When you perform the analytical procedure? How many stages?
When audit planning?
Okay, planning stage. Okay, second,
Substantive procedure.
substantive stage.
Audit review stage.
Okay, review stage. Okay, thank you, Ain. Review stage. Okay, can you determine for me at what stage is compulsory or must be and at what stage it may be. Where? Hani? Hani?
Yes, madam.
Okay. From this stage, okay, can you determine for class, okay, which one is stage must be and it should be?
Must be is the planning stage and review stage.
Okay. And substantive stage
Should be.
should be. Okay. So, thank you ni. Okay. Now, we are at what stage, class? Guys, at what stage now we are doing the analytical procedure?
Review.
Okay, good. So now we are at the review stage. So what is the purpose, okay, of the auditor perform the analytical procedures at the review stage? Emilia? Emilia. What is the purpose, Amelia? The auditor perform the analytical procedure at review stage. Okay, consistent with the auditor's knowledge. Of the business at a planning stage. Okay. So thank you, Milia. Now, we are looking at this review of financial statement. So what you are going to review at the end of your accounting period, actually it will be happen at year end here before the auditors issue the audit report. Before the auditor issue the audit report. So it happened before the auditor issue the audit report. Okay, so what you are going to review, you are review on the accounting policies. So whether the financial statement comply with all the accounting regulations. So this is what we have discussed before. So this is done actually at the beginning stage. When you review the accounting policies, it should be complied with all the accounting regulation and the standard. And you also review on the consistency and reasonableness of all the estimation. Remember we have done on the provision audit procedures for the provision. This is regarding the estimation, whether the estimate is reasonable and whether the accounting policy is used consistently. And then at the third stage, you are going to review the analytical procedures back, whether your knowledge is consistent at the beginning, here when the planning, and same with the after you perform all your audit procedures. Is it same? So if let's say during the audit planning, you estimate that the risk, the risk of material misstatement is low. So whether you confirm or not, after you perform all the audit procedures, so the risk of material misstatement is low. And then you get the same result. So means that you compare your previous knowledge and your knowledge after you perform the analytical procedure is consistent. Okay. So this is what you are going to do. Okay. This one in quick task, okay, in the quick review on the compliance. So what should you do? You have to consider whether, okay, you can refer to your books, okay, it's the same thing, okay, compliance with the accounting regulation, whether the information presented in the financial statement in accordance with the local or national statutory requirement. So local or national, so whether they have a local requirement, they need to comply, or of course as the national statutory requirement. And then the accounting policies employed are in accordance with the accounting standard. So all should apply the FRS or IAS. Okay. And then when examining the accounting policy, so you auditor should consider, you as an auditor, you must consider whether policies commonly adopted in the particular industries. So if the company is the manufacturing company, okay, what are the policies related to that industry? Okay, and then policies for which there is a substantial authoritative support. Okay, so means if you are dealing with the specific industries where they have their authoritative support, such as bank, so you need, because bank, let's say you audit my bank or you audit any bank, so it will have the bank negara or central bank as a authoritative support. So they also have to comply with all the rules by bank negara or central bank. Okay, whether any departures, okay, from applicable accounting standard are necessary for the financial statement to give a true and fair view. Okay, if they depart from the applicable accounting standard, okay, if let's say they have choose, okay, on the NCA, okay, on the if let's say on the capitalization of the expenses, okay, capitalization of expenses is not allowed. Okay. Okay, capitalization of expenses is not allowed, okay, in the standard, but the company has capitalized the expenses, okay, then they have the disclosure. So this is departure from the accounting policy, okay, from the accounting standard. Okay, so if the departures of the accounting standards are necessary from your judgment, then at the end you accept it and you still come up with the true and fair view statement. So that is the case of review on the compliance. Okay, because this is important when you later when you do on the auditor's report. Okay, and then whether the financial statement reflect the substance of the underlying transaction, substance of a form, or of the underlying transaction, and not merely the form. Okay, so in terms of the ownership, okay, so you might look at to the substance of the transaction rather than their form. Okay, substance over form. So when compliance with the national statutory requirement, okay, and accounting standard is considered, the auditor may find it useful to use a checklist. Checklist you can refer to your book, okay, at the page, okay, checklist page last part, page 340. Here you have the checklist, completion checklist. Okay. So that is regarding the review. So now can you read what Joe Price do in their review of financial statement. So what Joe Price have done, okay, she takes the following step on review of financial statement of Brown Co. So she reviews the accounting policy section, okay, and compare it with last year to ensure that there is no changes in accounting policy. So what you can see your annual report, okay, in the financial statement part, okay, on the financial statement, okay, under notes to the account, okay, notes to the account. If you use two devices, then you can check your download item there, okay, your download notes on the financial statement. Boleh you boleh refer so notes to the accounts. Okay, on the accounting policy, I think notes number 1 or number 2 on the accounting policy, depends on the company tapi dia bukan 3-4 ke atas, so it's probably most number 1 and number 2 or number 2. So notes to the accounting policy, notes to the account, look at to the accounting policy. Okay, accounting policies of the company. So how you want to compare, you take the last year annual report. So kalau you pilih company A, so if you are going to get knowledge about the company, okay, you have to compare, let's say you are made 2020 and you compare with the latest one, 2021. So is there any accounting policy changes? Okay, if no, then check. Okay, no accounting policy changes. So she reviews the accounting policy section. So this is the section, whether number 1 or number 2, I'm not sure. Okay, she reviews the accounting policy section and compare it with last year to ensure that there have been no changes. So if there is a changes, please note. Okay, you put a note and okay, you must perform the analytical procedures. You have to perform the substantive test. Okay, you have to perform the substantive test. Okay, substantive procedures. Okay, and then what Joe Price do some more? She confirms with Emily for other member that she has not noted any changes in accounting policy during the course of her work. So ask your colleague. Okay, ask your colleague if they have noted any accounting policies in their audit work. So if no, check. So means that there is no changes. Okay. Then she completes the most recent edition of the audit firm's accounting regulation checklist, which updated regularly for changes in company law and other regulation changes. So this is what you have to review just now, all regulation. Okay, all the regulation on the particular industry, on the substantial authoritative support, okay, and then statutory requirement, whether it is local or national. So that's what Emily do, Joe Price do. And then as they have no major changes from last year and financial statement are appropriateness, signs of the checklist and file that. So dia sign checklist yang ada kat belakang tadi tu dia sign. Okay, so means that no accounting policy changes during the accounting period. Okay. Any question class on the review of the accounting policies? Ada soalan? Ada tak?
No.
No. Okay. Clear. Good. Everyone good?
Yes.
Yes. Oh.
Yes.
Okay. Thank you. Now we go to the second one. Review for consistency and reasonableness. So what item you need to look at on their consistency and reasonable. Okay. you have to look at whether the financial statement adequately reflect the information and explanation previously obtained and conclusion previously reached during the course of the audit. So, if the financial statement are consistent, okay, with their knowledge of the entity business and with the result of the audit procedure, so what you are going to look at in terms of your consideration is on the information and explanation that you get during the course of the audit. And then, is there any new factors may affect the presentation, disclosure of the financial statement? This one is important because is there any new factors or new consideration, okay, of the company, okay, whether they want to include it in their presentation or whether they want to disclose it in their financial statement. So we will look also, okay, because our financial statement will cover the period after year end also. So this period, okay, audit report signed, okay, and then they have also the period on the financial statement approved. Okay, and also they have a period, okay, before the AGM lay down. So we will learn until this period saja. Okay, but the signal of condition, okay, we will learn until this period. Okay, so this period A, B, C. So we will consider this period and this period. Sini tunggu buat AA dengan triple A. Okay, triple A. Okay, so is there any condition, okay, that need to adjust to the year end? Okay, so you have to look at to the new factors, okay, where some factors, some condition or factors might be disclosed, okay, in the financial statement. So some we need to adjust, okay, and some we need to disclose only. Okay, disclosure in the financial statement. Okay, so adjust or not adjusting. So this is under subsequent event. Okay, and then whether analytical procedure applied when completing the audit, such as comparing the information in the financial statement with other pertinent data, produce result, arriving at the overall conclusion as to whether the financial statement as a whole are consistent with the knowledge. So this is the thing that you have to do. And whether the presentation adopted in the financial statement may have been unduly influenced by the director's desire to present matters in favorable or unfavorable light. So the methods of presentation, like what I said just now on the capitalization of the expenses, okay, is it why the company capitalize, why the directors decide to capitalize the expenses, okay, to the NCA, okay, instead of expenses, now they become the capital expenditure. So is it possible? Is it reasonable? Okay, so you have to do in terms of reasonableness. Okay, and there is no any hidden agenda by the board of directors. Okay, and then the potential impact on the financial statement of the aggregate of uncorrected misstatement. Okay, remember under the audit risk. Okay, audit risk Ingat lagi audit risk? Kita belajar audit risk. Okay, audit risk. Okay, equals to, what is the audit risk model? Naim? Audit risk model, Naim? Naim, please don't play with the telephone, class. I noticed that some of you always look at your handphone during my class. So please, so this is the last week of your class. Okay, Naim.
Ya, madam.
Give me the audit risk model formula.
Audit risk model equal to detection risk,
Detection risk. Detection risk is the last one.
inherent risk,
Inherent risk.
times control risk,
Time.
time dengan detection risk.
Okay. Naim again. Okay. Naim, how the inherent risk and control, what is the name for inherent risk and control risk? Risk of what? Risk of? Risk of what? Audit risk equal to inherent risk, time control risk, time detection risk. Yes. But how we have grouped the inherent risk and control risk and we call it one name. What is the name? Risk of?
Material misstatement.
Risk of material misstatement. Okay, good. Thank you. Okay. So when you have the inherent risk and control risk, and also you must look at the level of the relationship between inherent risk and control risk. This is the detection risk, and this is risk controlled by the management, and the detection risk is risk controlled by the auditor. Okay, and while talking on the audit risk itself, so audit risk should be put at a low level, and then based on the terms of reasonable assurance, you are not going to assure that the financial statement is 100% free from material misstatement. Then they have a certain misstatement that might not detected and you accept it. That is called acceptable audit risk. And normally acceptable audit risk set at a very low level. That is below that 5%. So the acceptable audit risk here may come from the uncorrected misstatement, where you accept it as the part of the audit risk. Whether it is individually or in aggregated. So uncorrected misstatement. So for the uncorrected misstatement that you think the uncorrected misstatement is not material. But for this is risk of material misstatement, uncorrected misstatement. So it's come from the misstatement. It's come from the misstatement, but the misstatement is not material. So when the misstatement is not material, you accept it as a acceptable audit risk. So that's why the rate of the misstatement is not high since that is not material. So there is a potential impact on the financial statement of the aggregate of uncorrected misstatement, include those arising from bias in making accounting estimate and identified during the course of the audit and preceding periods audit, okay, if any. So example of the uncorrected misstatement you can see from at page corrected misstatement. Page berapa ya kelas? Sekejap. Page 338. Okay, page 338. So that is the example of uncorrected misstatement. So after this, we will cover it for the aggregated of uncorrected misstatement. So what is the audit procedure for the uncorrected misstatement? If the uncorrected misstatement will not agree to adjust back by the management. Okay, and then the last part is on the analytical procedure. So auditor must consider whether the financial statement, are consistent with the auditor's understanding of the entities and its environment, the overall presentation, structure and content of the financial statement, and whether the financial statement, including disclosure in the notes, faithfully represent the underlying transaction and event. So disclosure in the notes faithfully represent the underlying transaction and event. So event is event before balance sheet and after balance sheet date. Okay, I guna balance sheet lah sebab you pun dah tahu ke perkataan balance sheet. Okay. And this is what Joe Price do. Okay, can you read from your book page? Okay, because maybe the slide is too small for you, then you can read from page 322. Page 322. Okay, read by your own. If you share with your friend, then you can discuss. Okay, read first. About 5 minutes. Understand it. Okay, done. Okay, everyone done? Done. So can you see how Joe Price performed the analytical procedure at the planning stage, and she compared it with the review stage. Nampak tak perbezaan planning stage dengan review stage? Which paragraph tell the planning stage? Pak Iza, tell me which paragraph tell us the procedures done by Joe Price on planning stage. Paragraph 1, 2, or 3?
First one, madam.
First. Okay, very good. So planning one is first. Faizah, first ke? Planning. Analytical procedure at the planning stage dekat mana? Is it first, second or third one? Cuba tengok betul-betul Faizah.
Macam mana, madam?
Okay. Sekarang ni Joe Price at the review stage. So daripada case study ni, from this case study, okay, which one consider at the planning stage? My question first. Is it paragraph 1, paragraph 2 or paragraph 3?
3.
3. Planning stage. Okay, tak nampak, tak faham lah tu. Okay, so okay, kelas. Emilia dah tanya tadi. Christina pula. Christina pula kat mana? At which stage, Christina, yang planning? Para 1, para 2 or para 3? Christina ada tak ni?
Madam, can I try?
Okay.
I think it's paragraph 2.
Okay, yes. Paragraph 2 lah, audit planning. Okay, thank you. Emilia ke Syamina? Emilia?
Amira.
Oh, Amira. Okay, thank you, Amira. Okay, so this is at the planning stage. Yang number 1 ni untuk yang mana? Ini, Amira.
Yes, madam.
Number 1 ni? Ini stage yang mana?
Sorry?
Number 1. Para 1 for what stage? Review kan?
Yes.
Okay, so number 1 ni review. Okay, nampak ni. Once Joe Price has reviewed all the work carried out by Emily, so she is familiar with the result of all the audit work. She turns to final analytical review procedure. So clearly state this. Yeah. So what did Joe Price do when the analytical review at the review stage? Okay. So she reviews any analytical procedures carried out at the planning stage, review balik at the planning stage, and identify the impact of any changes in the financial statement since the draft one which were used at the planning. So remember kan previously masa kita buat test kan I always show you the draft and that one actual. So the actual is the last one before you do the review stage ni. Nanti bila you dah siap semua review stage, then you masukkan all the figure in the actual. Okay. So what did Joe Price identify? She identified the impact of any changes in the financial statement since the draft ones which were used at the planning. She also calculates any key ratio. So you have to familiar with the key ratio. Okay, and then in this case, she calculated the key ratio, okay, at that stage and look at significant relationship in the financial statement. So dia kira balik the key ratio that which are not tested in the which are not calculated during the planning. So at the review stage, she calculated again. She calculated some more on the key ratio which are not in the planning stage. She then discussed the finding with the finance director. Okay, so this is what she identified during the planning stage. So this is during the planning stage. So whether the question is whether your knowledge tadi consistent or not with the review stage. Okay, adakah sama? So they put a concern. So she put a concern on the drop. Okay, ingat tak kita buat analytical procedure theory, dia ada drop in sales. So what is you have find out when they have a drop in sales. So what is your skeptical kat sini? You might skeptical that the company might be having problem in cash since they have dropped in sales. And in order to avoid the company to go to the going concern problem, then you have to discuss with the directors and the sales directors. Okay, sales directors here. Okay, you ask the sales director's action. This is done at the planning stage. So they said that they are going to review the pricing strategies and marketing strategies, and the Joe Price also performed the audits, the sales testing, and the amount of sales, okay, is affected in the last quarter. So they do the samples of the block sample, so they ambil quarter by quarter, and then it also agrees with a higher than unusual project inventory figure and reduced receivable figure. Okay, as she compared with the similar period to the last year. And then Joe reviews minutes of directors meeting, correspondence, so on. And lastly, she compared the new pricing strategies with the inventory record and satisfied herself that the cost is still lower than the NRV. So this is her conclusion. Okay, at after the review, the result of an analytical review shows that the figures make sense. So means that the auditor's knowledge at the planning stage and at the review stage is still consistent. Okay, the current problem with sales is being dealt with and does not affect the going concern. So when you at the planning stage, when you perform your analytical procedure, means that you must be able to detect any potential of material misstatement. So you have to be skeptical once the company have dropped in sales. So when they have dropped in sales, so automatically they might have dropped in revenue. So you have to focus in the sales testing of sales. Okay, audit procedures you focus kepada sales testing. Kan kita dah buat dah sales cut off, you kena confirm if the account receivable and so on. Okay, and this is the result. So in addition here you have to make a file note. So you have to put it under your notes in the current file. Okay, current file, what the methods need to be focused or need to be considered, okay, by the management at the next year financial statement. So for the next year, the company is expect to increase in marketing costs, okay, because the strategy tadi, pricing strategies and marketing strategies. So of course, they are going to increase the cost of marketing. Ini. Okay, the marketing strategy. So this is what going to happen next accounting period. So bila you buat the notes, okay, in the next accounting period, when you perform the analytical procedure at the planning stage, okay, you expect the rate of expenses will be high because of the marketing cost. And then and to review sales, okay, you need to review sales month by month basis. Next accounting period, bukan guna last quarter, okay? Kita tak guna block so kita tak guna quarter punya comparison. So you have to do month by month basis to assess the impact of the new strategies and continued existence of a competitors. So that's what you do in case of analytical procedure. Macam mana you nak guna analytical procedures as the the way how you are going to identify the risk of material misstatement, okay, from the current period to the next accounting period. Okay, any question, class? Okay, before we start for we go for break. 5 minutes break. Any question? Can you see the review then? Boleh?
Boleh.
Boleh. Okay. So 5 minutes break So 9:50. Okay, boleh break dulu. Okay, break kelas Kenapa you on ni?
Madam.
Okay. Okay, class? Done? Ready? Are you in? Dah ada dah semua? Dah.
Ada.
Ha. Okay. Ingatkan break sampai ke kafe pula break. Okay, so we continue Okay, so kenapa pula dia keluar ni? Sekejap. Oh, dia dah. Sekejap Okay, sekejap I stop sharing. Okay, dah. Ni I share balik. Aduh. Komen. Nak keluarkan ni. Okay, so now we continue on the second part pula events after the end of the reporting period. So for this topic, we are going to cover ISA 560 on the subsequent event, and then we are going on look at on the going concern, written representation, and this one we have covered on the overall review of the financial statement. Since because your book after I read the whole chapter last night, then I should discuss the overall review ni at the end. Tapi since your book put at the beginning, so never mind lah, just follow the book. Okay, so for the subsequent event, we are looking on the period you have to cover for the subsequent event. Okay, and then for the going concern, you have as what we discussed in the early chapter, earlier part just now. Okay, for the chapter 1, done. Objective 1 done, objective 2 now. Explain the effect of subsequent event on the financial statement up to the date financial statement are signed, and explain the audit procedure for event occurring up to the date of the accounting auditor's report. Okay, so that is the period we are going to cover on the subsequent event. Okay, and then mana nak hilangkan ni? Sekejap ya, I stop dulu. Terus report. Okay, stop sharing first. Problem pula ni. Okay, okay. Can you see? Okay. Okay, class. Can you see the slide?
Yes.
Okay. So this one later. So now we are looking on the date of the subsequent event that we are going to cover. Subsequent event. So as I said earlier, we will look at on the this part. This is year end. Okay, the period at year end. Okay, period year end ni period of the financial statement that you get the draft, and then you perform the audit test. Okay, for the period year end until before the auditor's report signed. So what we do on the overall review tadi is before the auditor's report signed. So at the active duty here as an auditor. Okay, active duty as an auditor. So dia ada satu lagi period kat sini. So period after the auditor's report signed, okay, and then before the financial statement issued. So before the financial statement issued is the auditors, the management, the board of directors approve the financial statement. Okay, the board of directors approve the financial statement. Okay, when you look at to the annual report, okay, when you look at to the annual report, okay, you will see they have two dates, okay, where you have the dates of auditor's report and the date of the financial statement signed by the directors. So ada director's declaration. Okay, you can check from your company director's declaration. So director's declaration is the date where the auditor approved the financial statement. Okay, but most of the company, okay, they have a same date, okay, of the auditor's report signed and the financial statement signed. So actually auditor's report must be signed first, followed by the auditors, the directors approve the financial statement. And then from the financial statement issued, okay, or approved by the board of directors, okay, then they have a period before the AGM they dump. Okay, AGM. So for your foundation level, so you need only to look at to the active duty here. So for the passive duty, it's not yet covered in your syllabus, and you will cover in next level of paper. Okay, but for the subsequent event, okay, the auditor have to look at whether, okay, you have to adjust to year end or you have to disclose. Okay, adjusting event or not adjusting event. So audit procedures undertaken to identify material subsequent event, whether you need to adjust to the financial statement at year end. So this is the financial statement current year. So let's say I give the common period 1st January to 31st December. So whether this event occurred after year end, but you need to adjust it to the current year. But some event might occur in this period, but no need to adjust. So you have to know, okay, what is the event that you need to adjust, or what is the event you no need to adjust. So what should you do is you have to review the procedures management has established to ensure that the subsequent events are identified. Okay, and review the procedures management has established to ensure that the subsequent events are identified. So how you are going to identify whether that is adjusting event or that is not adjusting event. So if it's adjust, you need to adjust, but if it is not adjusting, look at to the disclosure. Okay, read board minutes held after the date of the financial statement up to the date of signing the auditor's report. So you have to look at the date. Okay, so date 1. So the period covered for 1, 2, 3. So you only focus for 1. Okay, so at the date right after year end until before the auditor's report signed. Okay. Read the entities letters available interim financial statement. Okay, because normally the date after year end to the auditor signing, auditor company is already issued the quarterly financial statement. Q1 report has been issued. So kat sini ada, tak nampak. Okay, Q1 report. Okay, so the auditor need to get the letters available interim financial statement, budgets and cash flow forecast. Okay, because you need to know the level of anything happen after year end, okay, to the company, okay, such as is there any legal suit, okay, by the customer, is there any bankruptcy application, okay, to the company, okay, by their supplier and so on. Okay, and then inquire or extend previous oral or written inquiries of the entity's legal counsel concerning litigation and claim. So this is regarding the suit or the suit by the company, court case, okay, to the company. So you have to inquire to the legal or counsel. Okay, and then inquire management as to whether any subsequent event has occurred which might affect the financial statement. So you look at whether the subsequent event occurred to affect the financial statement, and you need to obtain a written representation as to the completeness of the subsequent event identified by the management. So if let's say the company can have the event that need to adjust, okay, so you have to get the written representation from the management. Okay, kena ada satu jawapan bertulis, okay, from the management. Okay. Okay, so this is what you are going to do for the event after the end of the reporting period. So the auditor should consider the effect of the subsequent event on the financial statement up to the date financial statement are signed. So actually, what is subsequent event? Okay, subsequent event are event occurring between the date of the financial statement and the date of the auditor's report. Okay, this one. Okay, between the date of the financial statement and the date of the auditor's report. Okay, that is subsequent event. And okay, sorry, up to the date the financial statement are signed. So up to the date financial statement are signed. So from period 1 to period 2 kat sini. So you have to consider this period as a subsequent event period. Okay, so dia ada long period here until the financial statement approved. Okay, until the financial statement approved. So this is a draft. Okay, draft financial statement. Okay, until financial statement approved. So that is the period of subsequent event. Okay, and then what is the subsequent event? Event occurring between the date of financial statement and the date of the auditor's report, and fact that become known to the auditor after the date of the auditor's report. So that is event, okay, that you need to review, okay, and you have to consider whether you need to adjust or the company need to disclose. So subsequent event includes Okay, so what I said just now, event occurring between the end of the reporting period and the date of the auditor's report. So this is tested for your level. Fact discovered after the date of the auditor report, not examinable in FOP. Okay, so we focus only on this one. Okay, number 1. Okay, any question, class? Okay. So what is the auditor's purpose? Okay, to review the subsequent event. Okay, the objective, so this is under ISA 560, the objective of the auditors is to obtain, okay, what is your opinion, actually what is your purpose? Your purpose is to obtain sufficient appropriate audit evidence about whether events occurring between the date of the financial statement and the date of the auditor report that require adjustment or disclosure in the financial statement are appropriately reflected in those financial statements in accordance with the applicable financial reporting framework. Because okay, under IAS 10, events after the reporting period deals with the treatment in the financial statements of events, both favorable and unfavorable, occurring after period end. So IAS 10 identified 2 types of events: those that provide further evidence of condition that existed at the end of the reporting period, that is called adjusting event, and those that are indicative of condition that arose after the end of the report period, that is called non-adjusting event. So when we talk about subsequent event, okay, so it will be divided into 2. One is adjusting event and another one is non-adjusting event. Okay, for the adjusting event, how you are going to know whether it is adjusting event or non-adjusting event? Okay, you have to look at the evidence of condition existed at the end of the reporting period. So when the evidence given, okay, of the condition, so evidence given of the condition, let's say evidence of bankruptcy. So if evidence of bankruptcy happen, so that is things might affect the decision users of the financial statement, and you should require the management to adjust in their financial statement. So because evidence of condition exists at the end of the reporting period. So katalah, okay, first of okay, so this is the accounting year end. Okay, the event is after, okay, let's say on 5th of January. So this is year 0, this is year 1. Okay, on the 5th of January, one of the major accounts receivable, major account receivable, so significant account receivable, okay, is bankrupt. Okay, so they hold the account receivable of, let's say, 5 million to the company, $5 million. So this major receivable is bankrupt. So do you think that the company cash flow liquidity will affect? Amni?
Yes.
Okay, yes. So that is the meaning of evidence of condition. When it happened, when it occurred 5th January. So kalau ikutkan dia tak termasuk dalam accounting period. Tapi sebabkan event tu of the condition exists at the end of the reporting period. So dia provide further evidence. Okay, so means, so bila the account receivable ni, this is bankrupt at 3 February. So maksudnya indication of account receivable ni dia berlaku sebelum lagi. So that's why you need to adjust. Satu pula, those that are indicative of condition that arose after year end period, okay, we shall not adjust. We shall not impact the financial statement. Tapi dia bagi indication sahaja untuk tahun akan datang. So you no need to adjust. Okay, kita tengok what is the adjusting event. So example of the adjusting event, okay, subsequent determination of the price of asset bought or sold before the period end. So subsequent determination of the price. So the price of asset bought or sold before the period end. So dia berlaku, let's say 30 bulan 12. Okay, the price of asset has been goes down 30 bulan 12 because of the economic situation. So the price, okay, of the asset bought or sold, okay, has been dropped. Okay, so that is need to adjust because it happened before year end. Okay, a property valuation which indicate a permanent diminution in property value which occurred before the period end. Indicate a permanent diminution in property. So maksudnya kena adjust lah balik the property tadi because the valuation is happen before year end. Okay, sama juga. Katalah dia berlaku 30 bulan 12. So berlakunya indication of permanent diminution in value. Okay, the value will be devaluation. Devaluation maksudnya nilai dia menurun. Tiba-tiba ada banjir besar berlaku. Okay, banjir besar berlaku that collapse the surrounding environment of the property. So automatic dia akan jadi permanent diminution. So you have to adjust back the condition, the financial statement. Receipt of the accounts from a non-current investment which indicates a permanent diminution in the value of that investment. Sama juga case. Permanent diminution. Indication of the net realizable value of inventory such as the sales price. NRV dia. So kalau sebelum ni boleh lower of cost and net realizable value. So now dia dah kena guna indication of NRV. Okay, take the NRV. Okay, as a to the not taken the cost, lower of cost and NRV, but they use the NRV because of certain condition kan. Kita kena belajar dalam inventory. So kena adjust. Renegotiation of amount owed by customer or the insolvency of a customer. That is the case that I said just now. Insolvency of the customer. Declaration of dividends by investment relating to period before the end of the reporting period. Declaration of dividends. So dividend by investment, okay, is declared before year end. Okay, receipt of information regarding rates of tax. Okay, receipt, katalah kerajaan tiba-tiba buat announcement. Okay, the government relating the rates of tax, okay, on 30th of 12. So before year end. So need to adjust. Okay, amount received in respect of insurance claim being negotiated prior to the year end. So any amount received in respect of insurance claim also need to adjust, and discoveries of errors or fraud. So if you discover the fraud and error, okay, before year end, you need to adjust. Okay, need to adjust. Okay, means that you have to ask management to adjust the transaction. Okay, non-adjusting event. So for the non-adjusting event, need the disclosure only. in the notes to the account. Okay, what are such events? Mergers and acquisition happen after the period end. Dia berlaku after the period end, merger and acquisition of the company, so no need to adjust but disclose. The company is going to have the merger and acquisition on March, okay, X2, X1. So that is non-adjusting event. Reconstruction and proposed reconstruction, issue of shares and loan, purchase, and so this is happen after year end, after year end. So okay, year end, and it occurred here. Okay, after. And purchase and sales of non-current asset and investment, losses of non-current asset due to fire or flood, opening new trading activities or extending trading activities, closing significant trading activities, decline in the value, okay, of property and investment after the reporting period, changes in the rate of foreign exchange, government action, labor dispute, and changes in pension benefit. So that one, if it happened after year end, so they only provide the indicative of condition. Okay, so you no need to adjust, just disclose. Any question? So for the adjusting event or non-adjusting event, so you have to consider on what the audit procedure you should perform. Okay, under 560.6, the auditor shall perform procedure designed to obtain sufficient appropriate audit evidence that all events occurring between the date of the financial statements and the date of the auditor's report that require adjustment or disclosure have been identified. So this what you should do. Okay, you have identified all the events that occurred before year end and until after the financial statement has been issued. Okay, whether that event need adjustment or only need disclosure. Okay, the keyword here you must identify. Okay, baru you kata that you have designed and you have obtained sufficient appropriate audit evidence. So means that when you want to gather sufficient appropriate audit evidence, the time for the evidence accumulation there is from 1st January. Okay, if let's say the financial statement signed, okay, is on 30th of April. So this is the period covered. Okay, including the subsequent event. Okay. So this is year end, 31st of December. Okay, year 0. So year 1, year 0. Okay. So what is the audit procedure? The ISA lists procedures to identify. So that is the word. To identify subsequent event which may require adjustment or disclosure. They should perform, when you want to perform the procedures, as near as possible to the date of auditor's report. As near as possible. So if the auditor's report is signed on the 15th of April, X1, so you have to perform your subsequent event identified as close as to the date of auditor's report. Okay, so these are the testing procedures. Okay, you should inquire the management, the status of item. So the procedure is inquire. Okay, inquire. status of item involving subjective judgment accounted for using preliminary data. Okay, data-data awal gitu ni. Okay, and then new commitment, borrowings or guarantees. Okay, you need to ask. Okay, on, so this is regarding the event that let's say the company not able to pay the debt. Okay, cuba tengok new commitment dia, borrowing dia and guarantee. Sales or acquisition or destruction of asset yang kita tengok tadi, sama ada diminution in value. Okay, issues of shares, debenture or changes in business structure. Okay, development of risk area, unusual accounting adjustment, major event regarding the going concern. So other procedures, so the most procedures is inquiry. Okay, and other procedures you can obtain understanding with other of any procedures management has established. Okay, and then consider procedure of management for identifying subsequent events. So how management identify subsequent events? So you need to discuss with management. Okay, and other than that, you have to read minutes of board meeting as Joe Price do just now, and review latest accounting record and financial information. So that are the testing procedures. Okay. So what happened if the auditor identify event that need adjustment? Okay. So when the auditor identified that event need to be adjusted, so the auditor shall determine whether each such event is appropriately reflected in those financial statements in accordance with the FRS. Okay. Okay, reporting financial framework. So kalau nak adjust, kena ikut standard. So the ISA also require the auditor to obtain representation confirming that all subsequent event has been adjusted or disclosed. Okay, who are going to adjust that financial statement? Is it auditor? Yasmin? Who are going to adjust the financial statement, Yasmin? Who? Can hear you?
Just management lah kan?
Come again, Yasmin.
If adjust, I think should be the management responsibility after
Yes.
the audit consult.
Yes. Okay, good. The management, you discuss with the management and management will adjust the financial statement. Okay, good. The auditor shall request management and where appropriate those charged with governance to provide a written representation. If you think that evidence is not enough, okay, when you inquire, because when you inquire, they might only give you a oral response. Then you need them to provide you with the documented evidence. So you ask them to provide a written representation. And next, so done on the subsequent event. So any question before you answer the question? Any question, class? You already learned, right, the subsequent event in your FFA?
Yes.
Yes, right. So any question, you know which area need to adjust and which area need to disclose. Okay, so this is the question. Okay, try to answer the question. Okay, everyone answer the question. 3 questions in how many minutes? 4 minutes, boleh? Okay, everyone do the question. Okay, when you already got the question. Okay, everyone put in the chat box. Okay, whether your answer is A, number 1, number 2, and number 3. Those who finish. Every one of you put in the chat box. Okay, answer please. Tak siap lagi Sorry. Alamak. Okay, Amelia ADC, Pika ABC, Yami ADC, Yasmin ADC, 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 AAC, Fitri, Mimi ADC, ADC, Faiza, ADC, 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 ADC. Tina, okay. So majority answer A, B, C. So one, okay, which of the phrase is not used at the final stage of the audit? So of course jawapan dia A. Siapa ada masalah? Semua betul kan? Yang this one semua betul. Okay, good. Yang 2. Okay, which of the following would be an adjusting event in accordance with ISA 10? Event after the reporting period. Assume that all amounts are material. So ingat tak I discuss on this one? Yang event bankrupt tu. Mana this one. Kan? So dia jatuh bawah mana? Kelas. This one. Kan sama kan? The situation is same. I think I give the same situation. So where's the question now? So the bankruptcy of a customer after the year end who owed 500 to the entity. So this is considered material. So you need to adjust. Okay, adjustment. So an announcement made by the entity after year end. So this is indicative of condition. So no need to adjust. A fall in value after the year end. Okay, fall in value after year end of investment also need not to adjust. Okay, an announcement to declare dividend made after year end also no need. Dia before year end, yes. Okay, the bankruptcy of a customer after year end. So even though it happened after year end, but the amount is material and it actually indicate the condition, okay, of the event. Condition, dia dah bagi condition. So it need to adjust. So majority, I look at the answer is B. So except P3, answer A. Okay. Africa B. And majority D, good. Majority D. So answer is D. Okay, and for number C, number 3, the answer is, yang ni simple je lah kan, sebab dia memang jawapan dia memang C lah kan, sebab what should the auditor responsibility for event occurring after the year but before the date of the auditor's report. So auditor should responsible, okay, for carrying procedures to obtain audit evidence that all events occurring after year end and before the date, okay, of auditor's report which need to be reflected in the financial statement are identified. So majority answer C. All lah rasanya answer C. All answer C. Okay, C. Yes, all C. Okay, good. Semua dah boleh jawab. So we break first, okay, for 30 minutes. Okay, any question? Do you have any question before we go for break? Ada soalan tak?
No.
No. We go for break first for 30 minutes, class. Okay. Thank you.